Right. Uh, we'll start today's session. Hope you all are safe due to current situation. We'll start session today. Basically, what we have shared already this tude. Hope you all having this tude. So this is one of main area in your curriculum. It is as you all aware, non-resident taxation. And also we are going to discuss international taxation as well. So we'll move to the learning outcome as per your curriculum. So here I would like to highlight the areas mainly you need to focus here is under learning outcome. Assessing income tax liability of a non-resident person is one key area, and other one is the remittance tax. So we will go through one by one how to calculate remittance tax and how to calculate non-resident income tax liability and the applicable provisions, and also the other relevant area is the double taxation. Then we will discuss what is the difference between OECD and UN model and etc. By taking some double tax avoidance agreement. So basically in this session, this area while covering, I would like to highlight from the beginning individual assignment also related to this area. So individual assignment, you are required to attend the individual assignment. I will share the outline and how the procedures and how you need to develop your individual assignment. The all the areas will shared because take this as a in advance announcement. So the we will share. The thing is you need to do is you need to analyze as your preferability. You can take 10 double tax avoidance agreement, including India, China, Singapore as main countries we are dealing with currently. And also you can take whatever the another 7 double tax avoidance agreement. And then you need to analyze passive income. Passive income means interest, dividend, royalty, and if it is technical fee. And also you can take it Vietnam also, because India and Vietnam, both countries, they have technical service fee article, the technical service fee article. So then India and Vietnam are important in this scenario. Then you can take Singapore, and also you can take Singapore as well, India, China, Singapore, and Vietnam also recommended. Then other with your preferability, you can choose any other 6 countries, including those 4 countries. Then you can have a good understanding about double tax avoidance agreement and passive income. Then I will when we are discussing the double tax avoidance agreement, I will give a quick mind map at that time how to attend any question on double taxation. Then that using that mind map, you can have any question, you can reply based on that mind map how to answer any exam relating to double taxation and international taxation basically. So let me move into the slide number 1. Slide number 1 here is basically we are going to discuss, right, resident status of an individual, because this is also before moving to the non-resident part. Basically, as per the section 3, section 2 and section 3, it's mainly discuss what is the charging section and accessibility. Then first of all, then because non-resident person, soon after we realize that non-resident person, you need to have understanding what is person mean. Then the person say means actually who are the person include when we say person in taxation, not only individual but also include companies, partnership, companies, trust, and also entity covering that. Also, we already discussed in the main first session. So all the persons are including here. The body of person, including individual, also. So here, first of all, you need to aware that how the person, then the interpret in the section 195. Under section 195, and also you need to have a mind map based on the first slide we shared in the very first day, and that you can have a mind map in your book to have understanding of person. Then in that we are going to discuss basically individual is under person. So individual, then how individual become a non-resident is the one of key area. So how to determine individual whether he is a resident or non-resident. So it is important you to have understanding on how individual become a non-resident. So person includes the section 95 ways in individual and entity, then the and body of person, corporate or unincorporated, executor, and NGO, and the charitable institution. Then the entity they have defined separately. Entity means company, partnership, trust. So then I am not going to discuss again the what is the definition of individual and so on, the person and on. So we'll quickly move to the session non-resident calculation and how to determine the non-residency. In the case of individual, based on we need to decide when you are going to calculate non-resident taxation. Then you need to decide how we are going to calculate non-resident. So first of all, what you need to do is there are three kind of tests you need to do. First one we call it as quantitative test. Here I will highlight here as first one. Sorry, quantitative test. So as per the section 69, if you can refer the section 69 of the Inland Revenue Act, the resident status of individual for the purpose of taxation is determined under the following criteria. First one is quantitative test. Then how quantitative, this is sorry, qualitative test. Quantitative test secondly we will discuss. First one is qualitative test. Qualitative test is how you are going to decide. So the first one is qualitative, is basically determine how whether he reside in Sri Lanka. What did mean reside? Reside means whether he is been in Sri Lanka. Then that mean what actually? Reside mean. The act didn't say anything about reside. They just say if an individual reside in Sri Lanka, he is become a resident. If he not reside in Sri Lanka, that means he is not the resident. So how reside is defined. So then we need to go to the general definition, how to reside, how to define this reside. So and also we refer to the DTS as well. The reside mean basically individual has a home regularly available. Very important, right? Here, the whether that individual has a home regularly available for use in Sri Lanka, then we can decide he is reside in Sri Lanka. So, and Also, then there are some criteria to determine the reside. So one is the individual who is having a regularly available home in Sri Lanka, and also there are some areas based on the given scenario you need to analyze. His family is in Sri Lanka, dependent of the family, then maybe parents, wife, children, so on. So dependence also being with him. So and economic and social interest. What are the economic and social interest? He might have some club membership, then the bank account, investment in Sri Lanka, so on. So if he has bank account, investment in Sri Lanka, and he has membership of swimming club and any other club, sport club or whatever. So then the economic and social interest also having in Sri Lanka. Then we can decide he is reside in Sri Lanka. So if it is not, then there may be some other where he must have that membership and the family and all. That's the meaning of reside basically. Economic and social interest and duration and frequency of visit to Sri Lanka. If it is more number of days he is stay in Sri Lanka and the frequency is visit in Sri Lanka also can be considered. Then if the country where who is having the DTA, in that case, you need to go to the DTA provision, how they are going to determine the residency. So on the, then let me share quickly DTA. Let me open the DTA first for your purpose. Right, it's getting open. Right, while it's open, I'll continue. Then if any individual, right, right, let me share it's open. Uh, Here, the DTA, this is the DTA with China. So then what you are going to identify residency as per the DTA. So we'll go to the reside definition. Here uh, here is important point is you need to refer the article 4 in the case of DTA if you are referring residency, if that country, if you have a transaction with China, then if it is individual or a company. Here the mainly the subparagraph 2 is for individual. In the case of individual, is a resident of a both contracting state. where the reason. So, whereby a reason of a person of the provision of paragraph 1, if an individual, in the case of individual, is a resident of both contracting state, then because let's say reside principle, they have a permanent home available in Sri Lanka as well as China, right? Or maybe India. Then both contracting state, or maybe then what you need to do is you can go with this. Then this status shall be determined as follows. So then he shall be deemed to be a resident in of the state in which he has permanent home available. The first one is permanent home, like I explained in the tutorial. So permanent home. If he has a permanent home available to him, both state. In the case of, let's say, he is having permanent home, both state. How then how you are going to determine the residency? Then he shall be deemed to be a resident in the state with which he personal and economic relations is the important part. The personal and economic relation are close. That is, we call it as per the international taxation, center of vital interest. So then if it is both contract and stay having permanent home, then we are going to the economic and social, the personal and economic relationship. That means whether he is having investment and bank account in that particular country only. Let's say his bank account and club membership or any other things is having China, then we are going with China. He is resident in that state. So in that, or else, let's say the second one, if the state in which he has center of vital interest cannot be determined, that means that both country, they are having the permanent home and as well as they are having personal and economic relations, both countries. Then what you are going to do? Then in that case, if you has not permanent home available to either state and he shall deem to be a resident of state in which his habitual abode, then in that case you need to go with habitual abode, right? If it is so, then the here what it is, again I will read. If the state on in which he has his center of vital interest, that means the personal and economic relations cannot be determined, or he has not a permanent home available, then maybe you can't determine the economic and personal relationship, as well as you cannot determine the permanent home available. Here the word is O. Keep in mind. Then to him either state. Then what you need to do is habitual abode. Then what do you mean by habitual abode? Can anyone tell me here what is habitual abode? Yeah, I'm getting one answer. Yeah, I got one answer. What else? Others? Yeah, I'm getting another answer. Do. Only one. Right, it's then it is basically the habitual abode is the period you stay. Then one answer also got in the where the usually lives. Yeah, exactly. Where that person usually lives. Then the where usually lives is the one you need to consider as habitually above. So then, if it is usually lives, even though he has permanent home, or if not, then the even central of vital also cannot be determined. Then you need to go with habitual abode. In that case, if he has habitual abode in both state, then the usually he lives in China and Sri Lanka as well. We cannot determine exactly, or neither of them. Even they don't have anyone anywhere. Then what you have to do is he shall be deemed to be a resident in his national, whether he is national in the citizenship basically. That means Sri Lankan or China, right? Whether he is having citizenship here or in maybe Indian or China, right? So then the nationality we are going with that. Then just determine the because here also currently we are discussing the dual citizens. What happened if it is dual citizen, right? Then uh, then if he is a national of both state or neither of them, then the competent authorities of contracting state shall settle the question by mutual agreement. Then the competent authority means who? Basically, according to this China treaty, the competent authorities they have defined then what is basically the the countries who have signed, the person who have signed the agreement. Basically, competent authority basically is the person we can hear in this agreement the Minister of Finance, Prime Minister, and the China, the Commissioner, State and State Administration of Taxation. They are basically in a revenue department in both countries. Here in even Sri Lanka, the finance minister normally they will not attend to that. The Commissioner General or else the Deputy Commissioner General on behalf of Sri Lanka and the other country. So then they will decide where he is going to tax, from where he is going to tax. Article 4 is mainly in case of relating to individual residency status. So then we'll move into the here because where the provision of one where by a provision of paragraph 1 in the case of individual is a resident of both contracting states. Normally we go with the first of all we go with the here the means person who under the state. Normally we go with the Inland Revenue Act and liable for tax in therein, whether his domicile, residence, and the place of management, and the place of office, and any other criteria of similar nature. Normal way of deciding residency. right? Subject, this is, we are going with the local law, but that is mean the Inland Revenue Act number 24 of 2017. Then, if it is unable to determine, then the act also refer both countries resident. Then that country also become resident. This country also become resident. In that case, only we need to go with this one. Then these things also we have used to interpret residency in the normal reside principle in the act also. Then how you are going to define the reside is, let me share the tut again. Very interesting part. Then again, here what are the things I have explained the DTA. The things are here also, the important point are highlighted. So the regular home, then also how nice they have designed to how determine the residency when it's come to the DTA. If it is reside both country, then we go with the DTA if it is available DTA. So and then if any individual is treated as a resident under this rule, very important, quantitative test is not required. Quantitative test is not required. Then first of all, what you need to do is do the qualitative test. If it is satisfied, you can decide whether he is resident or non-resident. Then if it is not, only you can go with the quantitative test. Quantitative test is numeric test based on the number of days. Basically, the Sri Lankan qualitative test is mostly applicable for Sri Lankan, and the quantitative test we are going with the non-resident. Let's explain again. If it is quantitative test also says residence in both countries, then we need to go with the DTA, right? I will explain the quantitative test. It is also interesting how you are going to decide the quantitative test. Here, then let me explain whatever the wordings available in the act also. If the individual present in Sri Lanka, this is very important in this while you are reading. Then this is very interesting. I will use the white board also to explain this, very important. Can anyone tell how to determine residency under the quantitative test, whether he is non-resident? Let's say foreign person, he's from China, let's say. He's from China, he came into Sri Lanka. Then the company asks you to determine whether he is resident or not. Then how you determine the residency, because anyway he does not qualify under residual test, reside test, because he don't have permanent home here. He just came for a yeah, agreement, kind of 1 year or 2 year agreement. They will finish it that one and go back. Then or something, right? He just came here as in without referring to agreement. Let's say he came here, then the company asks you to determine the residency status. How you are going to determine the residency? Yeah, right. During the year of assessment, I got one answer. During the year of assessment, he should be reside more than 180 days in year of assessment. Yes, I got one answer. Who else wish to give answers? If it is exceed දවස් 183කට වඩා වැඩියෙන් ඉන්දියොත් resident. Is it correct? Yeah, I will explain because no one is saying the answers. So, දවස් 183කට වඩා වැඩිය ඉන්දියාව resident කියන එක මේ law එකේ නෑ. So, what you need to do is not if the person who is exceeding 180 days in Sri Lanka, physically present in Sri Lanka, if you use the sounds word like physically present in Sri Lanka, more than 180 days. So then that was the previous law explained the residency, how to determine residency. So this law no longer applicable. If you explain like that, it is wrong. Refer to the section 62, 69. Again, see the any if an individual is present in Sri Lanka. I just highlighting and reading this one because I need to emphasize to you. Present in Sri Lanka during the year, and that present fall within a period or periods amounting in aggregate to 183 days or more. This is just said correctly. 180 days or more. Any 12-month period. Any 12-month period, not the year of assessment. That is why I have highlighted word any. Here, keep in mind, any 12-month period, which is very similar to the DTA provisions. If you refer DTAs always refer to the any 12-month period, not the year of assessment. Previous ad said, it is easy for us to determine residency in the previous act. It says clearly if you exceed more than 180 days in the year of assessment, then become a resident. That is easy for us to remember in the year of assessment. In this particular act says any 12-month period. So any 12-month period is not the year of assessment. Then it can be go beyond the year of assessment or go backward to the year of assessment. Then any 12-month. I will explain using whiteboard. Here again I need to highlight that commences or ends. That commences or end. Any 12-month period commences mean from the beginning before start of the year of assessment, and also ends during the year. He shall be resident in Sri Lanka. Then you cannot decide blindly without looking the previous days and the future days. You need to determine the residency based on the any 12-month period, which is commence or end during the year. Commence or end during the year. I will explain with this example. It is easy for me to have it explaining with this example. Then otherwise I need to take 2 examples. So here I will explain this one quickly with the example. When one of my client who has joined with Polytech Lanka Limited as a resident representative of Sri Lanka on a 32 months contract, right? He is the resident representative. So Polytech Lanka Limited is a branch office of Hong Kong, right? Then when he is required to look after 2 other branches in Maldives and Mauritius, then he will look these branches as well. So he visited Sri Lanka, keep in mind, on the 15th July 2018. Sorry, 15 July 2018. he visited Sri Lanka and resumed duties keeping his family in Hong Kong. His family is Hong Kong. Then you have a hint there, the family is there, that means he anyway reside in there. Then we need to go with the quantitative test, right? Then family is there, family in Hong Kong. He came here for a contract 32 months. He is allowed to go there and visit family and come back during the work period, 32-month contract period. So the family is there, then he is doing the work in Sri Lanka while looking the branches as well. So let me explain other thing also. Here he has traveled its head office and other branch officers for business matters. His travel schedule for entire period as follows. You might get this kind of question to determine residency, right? So his travel schedule for entire period as follows. So travel schedule they have given like the first date of arrival 15 July 2018. Is it correct with the what we said in the scenario? Yes, 15 July 2018 is correct. In the schedule also the same. They came initially to commence the work 15 July 2018. So then again he stayed Sri Lanka and later 21st October 2018 he left from Sri Lanka. Total number of days he stayed is basically 99. So number of days stayed in Sri Lanka 99. Then keep it mind the question is basically determine the residency status. Determine the residency status based on the quantitative test for the year of assessment 1819, 1920 and 2021. So you need to determine the residency based on the quantitative test, right? Then the year of assessment 1819, 1920 and 2021. So then he departure date is 21st October 2018 and again he's coming to Sri Lanka November 11. And again he stayed Sri Lanka 40 days and left 20th December 2018. And again he came 1st of June 2019 and left likewise. They have given the schedule. So then I will give a time you to determine to determine the residency status based on this schedule. I will give 10 minutes for you to determine the residency each year. You can take a screen print of this one. I will move to the because if you have the handout, then you can refer that because I will give another 1 minute to those who did not take a screen print. You can take a screen print because I need to go to the whiteboard for your better elaboration. So take the screen print of this and you can come up with the answer while I am drawing the diagram to elaborate the example. Right. I'm moving now. Then you can come up with the answer whether he's resident or non-resident each year of assessment separately. I am drawing the diagram here. Those who completed the answer, you can share with me. Then, those who completed the answers, you can share. Yeah, I got one answer. And also you need to determine 2021 also. 2021 as well. I will give one example is how to determine the residency. Let's say in your examinable year of assessment, let's say you are in the year of assessment, you are in the year of assessment 19, right? In this year of assessment, what you will do is you need to, it says non-resident person who exceed 180 days any 12 month, any 12 month, any 12 month means not the within the year of assessment. Any 12 month means not within the year of assessment. This to this, not within the year of assessment, even beyond. That it says commencing from, commencing, and also it says ending, ends, commencing or ending. Right, I got one answer also. Another answer, right? Then ending also you need to consider. Then let me explain this one with colors. Here, let's say commencing means basically from the beginning of the year, before starting the year of assessment. Then this green color, light green color, if it is during this period, the 12 month is this basically. Let's say 12 month is this. This is 12-month period, and right, like this is 12-month. They have completed here 12-month, including the previous year. When compared to 180 days, they have completed 180 days, including the previous year, in the 1819 as well, right? In the case of 1819 as well. So then in the year of assessment 1920, he become a resident because he has exceed 183 days. So then we can decide he has a resident because he has exceeded 183 days, more than 183 days. Then we can determine as a resident. So here, because it commencing, then let me explain ending part also. Ending part. Let's say he start only for 1 month in this particular year, and he is going to complete this while kind of ending. Next year, he will complete 180 days. In that case, you need to decide. Then also you can say he is resident because he exceeded 180 days. Then therefore, in the year of assessment 1920, also he is resident because he is exceeding 180 days ending year. Right? Let me share the tutor again, you to have better understanding. Here, the 12-month period that commences or ends during the year. Commences or ends. Commences or ends. Right? Then the 12-month period, 180 days or more, in any 12-month period, commences or ends. Commences or end. Then ends mean what is basically in the whiteboard we shared. Commences. Commences is here. Commences mean the commencing. They are commencing in this. Commencing this. I will put here as commencing. Mentioning commencing. Commencing. Right? Or else let's say starting for your language. Then here it's ending. Ending. The definition I am explaining here. Ending. Ending the during the year. Ending during the year. Ending during the year. He is completing. Ending is here. Then end here. Or commence here. Commence here or else end here. Right? Then ending, and he is completing 83 days. Any 12 month. Any 12 month is this period, 12-month period. Then the 12 month is this period. The 12 month is, any 12 month is this 12 month. Here we call it as 12-month period. Then we call it as here as this bar 12-month period. I will draw the arrow here. The 12-month period. Here also the 12-month period. Then 12 months. Here also 12 months. Then he might be exceed 180 days. Or during the year. Maybe during the year. Then the during the year I will use different color. Different color. Let me take a color here. The girls who like mostly in the year. pink color, right? Then during the year, he is completing 183 days. Here, during the year, exceeding more than, I'm highlighting the year, not they have state dates. They may be the below 190 days or more. Here, the more, I'm just typing, he has exceed 180 days during this year, the pink color area, this year. Year is 19, sorry, your year is year of assessment 1920. Then during the year, I will share the put again. Commencing ON, any 12-month period, the commencing ON during the year, right? Then the during the year anyway, we can take it. No need to go beyond that. The commencing also start here. That means starting again, linking to here, wherever he start this, maybe here or maybe here or maybe here. Then I'll put here, let's say starting the year. Then he completed the 12 months period, right? Then likewise, you need to analyze any 12-month period. Any 12-month period, maybe 12-month period is coming under colors. I have mentioned green color, yellow color and pink color. Then the 12-month period you can categorize like that. Here also the 12-month. This pink color is we are taking as a 12-month. 12 months. Right? Then start and end. It's clear. Then maybe during the year itself he will complete 180 days, or by ending the year of assessment, but we go beyond the year backward and see whether he has exceed 183 days. Go backward and see. Or just he came in the month of February and we ask him to confirm whether you have agreement in Sri Lanka with company in Sri Lanka, whether you have resident visa, how long, and whether you have agreement. Even if it is resident visa, we cannot determine his resident, he will stay more than 180 days, because then you need to have any other supporting as well, because the resident visa is not the point, because resident visa they are giving like if they are staying 1 month and 3 month, kind of the name is technically used as a resident visa. But even if it is resident visa, we not just taking as a resident person, because we need to go beyond that. We need to check the date who came into Sri Lanka with the passport. Exactly, you need to check the passport date. You need to take a copy of the or scan copy of the passport. They have arrival date, and you need to check whether he has valid agreement in Sri Lanka, and the date you need to cross check with the passport arrival and departure. Likewise, you need to analyze. Then it is not easy task you to determine non-resident person. Even we explain in the calculation, the practically we face how difficult to determine residency of a non-citizen, non-resident person. So this is how you need to determine the residency. Then in the given scenario, also I will explain below. In that, let me go back to the question. the date of arrival is 15 July and departure date is then then October 21st. Then in this year, he stayed in Sri Lanka. In this year, he has come. Then again, and during the year itself, 1819 itself, he again arrived to Sri Lanka November 11, and date of departure is December 20th. Then the 40 days again, I am counting. In this year, 40 days. And then 6, again he is coming 6th, June 1st, sorry, June 1st. June 1st he is coming again. Then it is the next year. Then in this year of assessment, he is staying only this period. Whether how many days in total? How many days in total? Here 9. How many days in total? The 3, right? 183 days. Whether he is resident, can we decide this way? Anyone tell me, can we decide whether he is resident, non-resident? Can we decide he is a non-resident? We cannot decide he is a non-resident, because I know you are doing this. Then what we need to do is, basically you need to draw a timeline. This is, I am going to do the timeline. I will put here as July 15, here July 15. Let's say here July 15 date, 5 July 17, sorry, July 17 is the date, right? It's 15. Maybe 15, right? Am I correct? Yeah, July 15. Then what you need to do is, from July 15, you need to go 12-month period from this date. Then you need to draw a 12-month diagram like this. 12 months. Right? Something like this. The 12 month. From this July 15 to next year July 14. Next year July 14. Then we will draw a diagram and see whether he is become a resident in this period. We just initially, without looking in detail, we just said no, he is a non-resident. But we need to go beyond that. We need to consider 12-month period. So then this year July 14 is the last date, is 2020, right? Sorry, 2019, here 2018 July, here 2019 July. Then in this 12-month period, this is 12-month period. In this 12 month, we need to decide how long he will stay. Because we know that in this period, automatically we took the amounts. How much? The 99 is one amount, 99 and 40. 99 and 40 we took as they given. 99 and also we took 40. Then whether there any dates fall in this year. Do we have any other dates? Yes, we do have. We have. Then the next date is he is coming in June 1st. June 1st and going October 30th. Then the June 1st to June 30th is 30 days and July 14. July 14. July 14 is 14 days. 14 days. Altogether how much? 30 plus 14, altogether 44. Then how many number of days? How many number of days? Altogether. Altogether how much? Altogether 99, 100, 140, 183. Then 183. He is staying Sri Lanka in this 12-month period, not the year of assessment. This 12-month period. Is it resident? Can we decide as a resident because he is only staying in Sri Lanka 180 days? Can he become a resident? Can he become a resident? Anyone? Can he become a resident? Can he become a resident? Can he become a resident? He is only staying 180 days. No one answering. Can he become a resident? Can he become a resident? Did you add active sleep mode? Yes, exactly. We can consider as a resident because it says 183 days or more. 183 days or more. If it is 183 days exactly, then also become a resident. Right? In this year, he is a resident anyway. Then we can conclude he is a resident in this year. Likewise, I am not going to have detailed discussion on that. I think this is sufficient for you. If you want, before I am moving to the session, you can ask me to do other 2 years also. Then I will explain the answer. If you want, you can tell me. I will explain next 2 years if you need. Unless I will continue. So I am moving to the tute again. Then likewise, you need to analyze. I am sharing the tute again. This is, they have given the days. Then according to this period is 12-month period is very important you to determine 12-month period from 15 July to 14 July 2019, right? Then 1st of April 2019 to 31st March 2019, then another 12-month period. Then the 13 May to May 12, 2020. Because this year anyway he is falling under the financial year. No need to even, then we need to just calculate number of days. Then the May 15/2019 is the date we can go back, we need to, how we need to decide May 12 to May 13. Then based on the days they have given, the last date of the departure is May 12th. Then because we know that he is not coming again, we know that he is not coming again in Sri Lanka, then this is the last date. Then what we need to do is go backward and see whether he is completing 12 months. Let me share the screen. Here, this year you don't have any doubt because I think you can decide easily. Just need to calculate the number of days only. Then the last year, 2021, according to the given example, May 15, May 12th, 12 is the last date. Then what he need to do is, May 12 is the last date. Then the May 12 is somewhere here. I will just take as random somewhere here as May 20, May 12. Then this is, I will word it as May 12. May 12. Then what he need to do is, because this is ending like we discuss here, ending part. Here also he is ending. Then what we need to do is, we need to come back again, backward, and see whether he is completing 183 days in this 12-month period. In this 12-month period, just he need to check. They may be here, then or somewhere here, right? 12-month period, whether he is exceeding 180 days. Then again, as per the given dates, you can calculate he exceeding the 180 days. Then we can conclude that this year also he is resident, this year also he is resident. Right? Then I am moving to the answer is given in the tute. Right? Then all 3 years he is resident, and the final test is also we need to look at the residual test. Residual test is mainly just we can take it as it is easy for you to determine. The one is employee or a government official who work for government. As example, you can decide is the person who is working abroad with families, maybe sometime the person who represent the Sri Lankan government, those people, even the spouse, the wife also abroad, even though even the family, entire family lives there as and work for the Sri Lankan government, then that family, entire person and the family including, they also will become a resident in Sri Lanka. Then the government employee or the official of the government of Sri Lanka and his spouse is posted abroad during the year, then he shall be a resident in Sri Lanka. Then that person is, we can determine a residency as Sri Lanka. Then there are some diplomats, they are working and represent Sri Lankan government. So, and then the officials of the government are abroad, posted abroad to work the mission of government, diplomatic mission, right? Then he is treated as a resident irrespective of number of days. We are not going to calculate number of days. We just say he is a resident. No need to calculate. It's just residual. Just we can say they are resident in Sri Lanka. So, and it's he stays in Sri Lanka. So this in this, not only employees but their spouse are also treated as. Then the one question is the sometimes the student is asking the employee only whether that person, let's say the man who is working, whether that wife also, husband is working for Sri Lankan government, wife also there, whether that wife also become a resident or she treated as a non-resident. That wife also treated as a resident in Sri Lanka. The quickie questions. So the residual test continuation. Then if an individual who is an employee or an official of the government of Sri Lanka, he pursued a vote. So this is what we discussed. Yeah, this is what we discussed previous slide. And then the second one is the residual test is applicable for employed on a ship. Employed on a ship. If a person who is employed on a ship, then whether are we going to determine how? Because when the person who is working a ship, he is not in Sri Lanka, not in the because that person is always traveling, because if it is a ship they are traveling, they will take 1 month, 2 months, 3 months to travel some other area. Then even if it is Sri Lankan person, we cannot uh, fix a GPS and whether he is exit boundaries, how can the partially he is stay in some other country area, some other country area. Like us, we cannot decide the residency. So then what you need to do is, it is easy. You need to refer where the ship is registered. If it is ship registered under the Merchant Shipping Act, then during the period individual so employed, then he will be a resident in Sri Lanka. Then we need to treat it as a resident if it is ship registered in Sri Lanka. Right? It is easy for you. Then you can read this. And then the company perspective is again important area for you. The section 69.4 is also you can refer the section the 69.4. 69.4 explain how to determine residency of the company, because anyway we discussed previously when very first day when we are discussing the company taxation. Therefore I will quickly go through with this, the how to determine residency of a resident company. So in this case company shall be a resident in Sri Lanka for a year of assessment. Not like individual, like any 12 month. Right? Is incorporated or form under the laws of Sri Lanka. Incorporated mean I have put a picture here. Incorporated means you have registered in ROC, Register of Companies Sri Lanka. In the e-service also they have now available. So then you can register through online even. So the incorporated company, that means born in Sri Lanka, like baby who is born in Sri Lanka, the company is incorporated in Sri Lanka. So and registered or principal office in Sri Lanka. If they have registered office, they registered in Sri Lanka, even if it is incorporated outside, they can register here as a company. Then in that case, even principal office, maybe head office is functioning here. That can be a resident company. So, and also any time during the year, the effective management and control of its affairs of a company are exercised in Sri Lanka. See here this picture, they are deciding everything here in Sri Lanka. They have a meeting in Sri Lanka, they design how they have a strategic business plan, They decide how they are performing, then they are planning the entire world for how they are performing and what are the plan they say increase sales and so on and so on. So then we can decide it is effective management and control is exercised in Sri Lanka. In that case, that company become a resident in Sri Lanka. But currently, in practice, we are going with first one, incorporation, because those other two conditions are not in practice. Even they are not, the Department of Inland Revenue, they are not going to go in detail to verify the whether it is the effective management and control is carrying on here. So the whatever the company they registered as a branch, they will treat it as a non-resident. So they will go with the incorporation of formation. So this one, the whatever even they cannot determine, then the people, there are some case laws came because of their to determine the residency, because the effective management and control how department, because of the employee number of employees they have, they cannot go to beyond the because they have so many files to audit and get revenues from the people. Therefore, they are not going to go in deep to have determined residency, uh, because anyway, if it is non-resident, they are getting more. Even remittance tax also they are getting. So they don't worry about determined residency. So the incorporation is the matter. Basically, they are looking the if it is effective management and control. Also, they are practically it is like in area they are not going to verify in detail. So that is a practical aspect of that. Let me share the next slide. Is chargeability again the non-resident person. So the non-resident person is chargeable, as I explained previously. Also, the very important part is coming under section the accessible income section. Then this is very important at the exam also. The accessible income under section 4. Section 4 subparagraph A and B is very important when you are writing down the answers when the non-resident taxation, because the first question is you need to write down the 69 as well, the residency, how the charge their profit, the chargeability accessible income section is section 4. The a non-resident person is chargeable income tax from employment, business, investment, 4 areas for a year of assessment, subject to such income arises or derived from a source in Sri Lanka. From a source in Sri Lanka, right? Non-resident source in Sri Lanka. Whatever the income they are earning in Sri Lanka only, not the world income, not the world income. Whatever the income they are bringing back from Sri Lanka, what they are taking away from Sri Lanka, what they have earned income while doing the business in Sri Lanka, what they have did in what they are doing in Sri Lanka and what they are earning in Sri Lanka, then those income are subject to income tax. Non-resident person. Here, then we are moving to non-resident individual. Non-resident individual is chargeable with income tax only on income arising or derived from a source in Sri Lanka. Source in Sri Lanka means whatever the source, right? Then how they are earning profits. Maybe the business profit, maybe interest or dividend, whatever the source, right? Then, therefore, the deciding factor for the chargeability of non-resident person in Sri Lanka is where the source. You can refer the section 72 and 73 in the determining source. It's simple. So it is business. If they are doing a business in Sri Lanka, they are liable. If they having interest income, unless it's specifically exempt, dividend, there are dividend also exemption, royalty, any other technical fees. If they are earning, then they also liable. since there is a source in Sri Lanka, because they earning from Sri Lanka. In Sri Lanka or not. So then, here in the case of individual, while as far as individuals are concerned, uh, I'll move to the individual part first. The employment. Employment is a matter how to determine employment and how to tax them if it is a non-resident person. Then the payment received in respect of employment. Payment received in respect of employment, because I read this one because it is important. It is says in the section 73 and section 72 referring the section 73. So that is I need to emphasize here payment received because of employment to the extent derived in respect of employment in Sri Lanka. Here, see the word in employment in Sri Lanka. Doesn't matter wherever paid. It doesn't matter wherever paid, but employment in Sri Lanka. Let's assume a person who work here, like a UK person who is coming here and working here, then the salary paid by the UK parent company. That doesn't matter. He is employed in Sri Lanka, therefore he is liable. That kind of case you might get, because some other non-resident person is working here as employment in Sri Lanka, but the salary is paid by the parent company. Then wherever paid, that employment exercise in Sri Lanka, therefore he is liable to pay income tax in Sri Lanka, because source is here. Source in the sense work. He work in Sri Lanka as an employment. So then, the important thing, if paid by, on behalf of the government of Sri Lanka. If paid by, on behalf of the government of Sri Lanka, wherever the employment, see the wording, wherever the employment is, diplomats are liable, even if it is employment outside. Then their salaries tax in here. You might have some friends, even diplomat, they are working as a UK embassy, or whatever the embassy, Japan, China, India, whatever, wherever. Then they work for the Sri Lankan government. So they work Sri Lankan government, and wherever employment, it doesn't matter whether they are working in India or China, Japan, UK, England. So tax is chargeable in Sri Lanka. Sorry for them, the tax is chargeable in Sri Lanka. So then, by stating that is very interesting, you can get a question in this. Then therefore, a non-resident individual, irrespective of whether such individual is citizen Sri Lanka or not, citizen of Sri Lanka or not, the chargeable with income tax on the payment in respect of employment exercised in Sri Lanka. Then payment in respect of an employment. Then the payment in respect of an employment exercise in Sri Lanka. Such payment may received in rupee or foreign currency. Therefore, anyway, you can keep it. The non-resident individual, irrespective of whether the individual citizen of Sri Lanka or not, maybe non-citizen, maybe. The chargeable with income tax anyway, because of the employment. So, however, the important area again, however, whether there is a double tax, DTA, double tax avoidance agreement, DTA, between Sri Lanka and other countries, let's say India, Sri Lanka and India, in which such employees resident, then the provision of that double tax avoidance will apply. So in this case, whether there is a double tax avoidance agreement, let's assume they have double tax avoidance agreement, Then in that case, what you need to do is, if they have a DTA, if we have a DTA with that particular country, in that, then the employee is resident, the such provision. Only in that case, we need to determine the DTA and the residence rule we discussed as per the, in the case of employment, it is dependent personal services under employment, dependent personal service article you need to refer. Uh, I will say the dependent personal services article also I will share with you. I'm not going to explain this. Dependent personal service also. This is independent personal services and the dependent personal services here. The article 15 in the China Treaty. Then you need to decide this way to determine residency. Dependent personal services in the case of remuneration derived by a resident person of other contracting state in respect of employment exercise in other contracting state. That means employment in Sri Lanka, then the resident is other country. His employment here. Then how you need to determine the residency. Then what you need to do is you need to check these criteria. I will have a session on this, the DTA provisions, how to determine this, or else separately. Let me share the tude again. And then the business income. Then income from business. Income from business, again, if a, then in this case, if an individual, not the company, in the case of individual, then he is doing a business, right? He is doing a business. Then in this case, how we are going to tax? The profit arising from a business, individual who is doing a business in Sri Lanka, then we say it as carried out in Sri Lanka. He business carried out in Sri Lanka. Because he getting the profit because of he is doing a business in Sri Lanka. He is getting a profit by a non-resident is chargeable with income tax. Is chargeable with income tax. Payment including service fees attributable to service rendered in Sri Lanka. Any service fee attributable to service rendered in Sri Lanka. Payment including service fee. Any payment. So attributable to service rendered in Sri Lanka are chargeable with income tax irrespective of the place of payment. Irrespective of the place of payment. Then is chargeable with income tax whether wherever paid, irrespective of the place of payment. So here the fees for technical service, so here the fees for technical service are received from a person outside Sri Lanka. Just assume it could be chargeable with income tax if a payment has a source in Sri Lanka. Then if he has a source in Sri Lanka, because he is doing the business here, that is why he is getting the income. The person outside Sri Lanka is paying this part, this amount. So then, because of the source, because he is doing the business in Sri Lanka, therefore, we need to tax that amount in Sri Lanka. Then the investment income. Investment income, again, if a income from Sri Lanka is chargeable with tax if payment has a source in Sri Lanka. To the extent to that domestic asset. Domestic asset you can refer in the section 95. Then the whatever the asset belong to here. So in all, any income which is not derived from a source in Sri Lanka, any income which is not derived from a source in Sri Lanka, not subject to income tax in Sri Lanka. Whatever the income which is not relevant to business here, they do the business outside, then those things are not subject to, because the main principle when we discuss in the section 4, non-resident person is subject to income arising in or derived in Sri Lanka, with a source in Sri Lanka, not the world income. Then, when we discuss about non-resident companies, again important for you too, because you can easily get these marks while having, because answers always in the environment. Because you just need to emphasize the things whether business is carried out. Those highlighted words are very important when you are writing down. So then the non-resident companies, as discussed under the non-resident individual, non-resident company also liable income arising in or derived from a source in Sri Lanka. Income arising in or derived from a source in Sri Lanka, in where they are doing the business, from what they are earning profits. So you need to keep in mind that part. So, right. Then the final here also very important part for you, the final withholding tax. Final withholding tax. Final withholding tax also very important in the case of non-resident. The withholding tax deducted under section 88(1)(d) of the Indian Revenue Act from a payment made to a non-resident is treated as final. Because if it is withholding tax deducted, we treat it as a final. Then the section 88(1)(d) says, from a payment made to non-resident, person treated as final withholding payment other than the payment received through a PE in Sri Lanka. If the non-resident person he having a PE in Sri Lanka, then they need to calculate the profits here, profits and income. They need to do the plus minus and see whether they are earning. Then they need to pay tax on profit, the taxable income. So whatever the most of the scenario you might come across where, since you are working and you are practicing as or training as auditor, or the practicing as in accounting firm as accountant or whatever position. So there are some payment to the foreign countries. They didn't even come to visit Sri Lanka. They do their service from outside. Then there are some companies, even the technical service fees. Their company, they are doing services outside. But what you do is you make the payment. You make the payment. Then what you send is, let's say 100 you need to pay, then you can't send 100 entirely. Then there is withholding tax requirement. If it is service fee, then you need to deduct withholding tax 14%. 14%. Then I will explain before moving to pay and doing it. Anyway, I will explain here also withholding tax, how this become a final. If it is a non-resident person who is not coming in Sri Lanka, they are doing the service outside, while explaining the whiteboard. Yeah, I will explain to the whiteboard. Just save this one, and here Here I will do a diagram. Here, let's say company is here Sri Lankan company, and this is Indian company. Uh, this is Indian company. Anyway, I am doing this one when we are doing the DTA also. Let me what you do is, let's say you are going to make the payment to them, India. Then what they do is they will deliver service from there, and they will deliver service. What you do is they are rendering service, let's say technical service, the professional or technical service they provided outside Sri Lanka. Then we call it as the technical service. Technical service. We'll have it like here, right? They provide a technical service. What you're going to do is you are going to make the payment in, let's say the value of 100 million is the amount. As for easiness, the service you got the invoice, then you are going to make the payment to the India. Here I will name the company here as Sri Lankan company. Sri Lankan company, and this is Indian company. Indian company. Sorry. Right? Then what you do is you need to pay 100 to them. Then can you pay 100 to India? Anyone can tell me whether we can pay 100 to India? Entire 100, because what we do is basically once we get the service, we need to pay. No, how much we will pay? Are we going to pay 100? Are we going to pay 100? Yes or no? No. Then what we need to do is we need to check the section which is applicable for non-residents under section, which is the section for deduct withholding tax. Withholding tax for non-residents. Anyone? Anyone here? What is the section to deduct withholding tax? Can we pay 100 entirely? No, you cannot deduct. Section 85 1B pays a service fee with a source in Sri Lanka to a non-resident person. They rendered to Sri Lankan company because technical service, as per the section 73, there is a source. Then the withholding tax is applied 14%. Then we cannot pay entire 100. We need to deduct withholding tax 14%, 14%, sorry, 14% as per the section 85 1B 85 1B. You need to deduct. Then, are we going to pay 86? Then, after deducting, are we going to pay 86? Are we going to pay 86? Pay 86. 86 came because 100 minus 40. Yeah. Are we going to pay 86? Are we going to pay 86? Can anyone tell whether we are going to pay 86? If you say, I will appreciate the correct answer. If you know this one, then you know the international taxation as well. Anyone here? Anyone here? Are we paying 86 to India? Because as per section 85(1)(b), we need to deduct any service fees, technical service. This is, are we going to pay? Just simple question. Just type and say, are we going to pay 86 or else we are going to pay different amounts? 1, 2, 3, 4, 5. No one. Right. Then I assuming that no one is here. Anyone is here, you can raise your hand virtually. I need to see whether you are sleeping mode or not. You can raise your hand virtually to identify me whether you are sleepy mode or not. Are you here? Can you hear me? Can you hear me? Okay. Then I'm assuming that one student is anyway there, at least one student. Okay. Happy to see. There are 2 students. Yeah, 3 students are there. Okay then what we going to do is we need to check whether we have a DTA with India. What we need to do is whether we have a DTA with India. We call it as DTAs, DTAs, even whatever the wordings. Double tax avoidance agreement, double tax agreement, double tax treaty, all words are same, right? It is a kind of gazette. It is a legal valid document. The agreement between the 2 countries, basically. In order to avoid double taxation. If it is tax in Sri Lanka and if it is taxing outside, then what we need to do is we need to avoid that taxation. Then whether DTA is available. If it is not in this particular country, what we do is we need to deduct 14 and pay it 86. Then we know that here that there is a DTA with India. Yes, we have a DTA with India. Then since we have a DTA, we need to go with the DTA. What is the article for India? Then you need to go to the India DTA and see the article, relevant article in case of DTA between India. So this is India DTA. I will show you what is the applicable article in the case of technical service. Here, the royalty fees and technical service. Royalty fees and technical service. Royalty and fees for technical service. Here, it says, in the case of technical service, in the case of technical service, fees for technical service, then what is the applicable rate is should be 10%. Shall not exceed 10%. It says shall not exceed 10%. Then Inland Revenue Act says 14%, but the DTA says 10%. India company I took here, the Inland Revenue Act says 14%, but DTA says 10%. Then DTA, as per the DTA Article 12, as per the DTA Article 12, what we need to do is, as per the DTA, withholding tax is, I will choose different color, it is not. Withholding tax is for applicable to, let's say withholding tax is applicable, rate is 10% as per the DTA. As per the DTA with India Article 12. So what now you are going to do is, as per the DTA with India and Sri Lanka, you will pay not the 100, even not the 86. You need to pay only 90. You need to pay only 90. So what you need to do is you need to pay according to DTA because it is benefited for the both countries. So if it is non-resident, because it is non-resident person, he is only have one service, they have done only one service, then it is subject to 10%. Then what we do is we will pay only 90 here after deducting 100 into 10%. After deducting 100 into 10%. They can deduct 10% and they need to remain only 90. Then what you need to do is that 10% is $10. $10 or whatever the amount, 10, whatever the deducted 10, you need to remit it to Inland Revenue Department. What you need to do is you need to remit to this 10 to IRD, the tax office. I will draw IRD here. We draw IRD is here Inland Revenue Department. Then this is the 10% they have deducted. What they will do is they will pay 10 here. Then this 10 is came 100 into 10% withholding tax as per the 10% withholding tax as per the DTA, right? Because not the 14% we are applying, as since there is a DTA, we are paying 10%. So this is the 10% is we are paying to the India. Then what we do is we pay 10% to our Inland Revenue Department. Then the department will issue a certificate which is called it as tax deduction certificate for in order to claim the tax whatever you paid in here. The Indian company, non-resident company, can claim, since there is a DTA with India, they can claim this 10% in the India as a tax credit. They can claim a tax credit in India. Then IRD will issue, I'll do that one also for your easy reference purpose. Then the IRD will issue T10, sorry, tax deduction, not the T10, tax deduction, and also the payment, two certificate basically. The one is in order to proceed the payment. Then other one is basically they will issue the 10. 10 is basically in order to claim the credit. This is basically they will issue one certificate for them to claim the 10, and this is in order to make the remittances. This is they will stay the 10 here as a credit. Tax credit purpose they will issue 10, and here the payment purpose separate certificate, clearance certificate, we call it as tax clearance. Basically they in order to pay 90, then only they can make this 90 with for showing this to the bank, the respective bank Sri Lankan company dealing with. They can show this certificate with 90, and then they can make this 90 to the India company. Then this certificate definite normal practices, they will both certificate they will issue to Sri Lankan company. Sri Lankan company one will send it to the bank, and this tax credit certificate they will directly send it to the Indian company. They can claim it. For your understanding purpose, I draw this one to directly to the Indian company. This tax credit Indian company can get it. Then how Indian companies tax computation is, then whatever the taxes they have in India, then they can claim as a credit, because the in that is state Indian country, then they are liable to pay tax in India at the rate of whatever the applicable, let's say 35%. They include in Sri Lankan income, let's say like for you, because I draw this one and I can easily explain that one as well. Let me share that one also. Let's say Indian company, they have tax income, let's say they have income only from Sri Lankan company income. Let's say Sri Lanka. For easy reference, I took in Sri Lanka only. Then let's say 100 million. Then the tax rate is, let's say 35%. 35%. Then tax is 35. Then what they can do is they can deduct this tax credit 10%. They need to only pay 25. Here I put as 35% tax rate. What they need to do is only tax authority, Indian company need to pay only the 25 because they have a credit, right? This is kind of double taxation, and because withholding section also, while doing the withholding tax section, I explained this one. This is important when we are discussing the DTA, because I am not going to discuss this one again, because I explained this entire process, how the DTA is applied, and for in the case of even this is I took here as a I took here for technical service. You can apply royalty here, you can apply dividend here. In the current context, dividend is exempt, dividend payment to non-resident. I will explain that one later. the next tomorrow also you are having on session. Please note that the same time you are having a session tomorrow as well. Therefore, I will explain in that session the rest of the things. Today we will wind up today. Then tomorrow I will explain the rest of the part. And the screen, the work done, the whiteboard working also will share later on. And hope to see you again tomorrow in the rest of the session. I will explain the balance part tomorrow. See you tomorrow.